Hello traders. Welcome to today's Pairs of the Day update. Let's delve into the latest movements and key factors influencing the Japanese yen, JPY, US dollar, USD, and Canadian dollar, CAD. The Japanese yen has recently steadied after 3 weeks of appreciation against the US dollar, driven by its safe haven appeal amid political uncertainties and economic concerns in China. This stabilization comes as investors focus on the upcoming Bank of Japan meeting, where policymakers are expected to hike interest rates by 10 basis points and taper bond buying operations, signaling a shift towards policy normalization. In parallel, the US dollar index has climbed to a 3-week high above 104.50, fueled by a risk-off sentiment ahead of the Federal Reserve's monetary policy decision. The Fed is expected to keep interest rates unchanged, maintaining the current range of 5.25% to 5.50%. However, rising unemployment and a nearing confidence in sustainable inflation control suggest potential rate cuts by mid-September. This dovish outlook ties into the broader narrative of central banks like the Bank of Japan adjusting their policies in response to evolving economic indicators. On the other hand, the Canadian dollar faces pressure due to falling crude oil prices, a crucial export for Canada, and the anticipation of further rate cuts by the Bank of Canada. Following a recent interest rate reduction, investors have priced in a 60% chance of another 25 basis point cut in September. This expectation contrasts with the Fed's cautious stance and the Bank of Japan's steps towards policy normalization, underscoring the interconnectedness of global currency markets and the importance of staying informed about each currency's unique drivers. Now, let's see what technical analysis reveals. Let's look at the charts. Okay, we have opened the 4-hour chart of US dollar to Japanese yen. The price is currently trading around the 20-period moving average, while the stochastic indicator is crossing lower near the overbought area, suggesting a potential downtrend. For support and resistance levels, we have identified 153.10 and 151.95 as support, with resistance levels at 155.35 and 156.61. If the price continues to move lower, it may find support around 153.10 or potentially extend down to 151.95. On the upside, any rallies could encounter resistance near 155.35. Now, let's switch to the 4-hour chart of US dollar to Canadian dollar. The price is currently trading above the 20-period moving average, with the stochastic indicator moving higher towards the overbought area, suggesting a possible upward movement. We've identified 1.3819 and 1.3782 as support levels, and 1.3891 and 1.3925 as resistance levels. If the price continues to move higher, it could encounter resistance near 1.3891 or even test up towards 1.3925, with profit potential ranging from 30 to 60 pips. Conversely, any pullbacks might find support around 1.3819. US dollar to Canadian dollar current trend is uptrend. Always remember to consider your risk management before entering any positions. That concludes today's update. See you in the next video.